Welcome back. You're watching Closing Trades on ET Now. Well, let's continue our conversation on the impact of COVID on markets, on companies, on different sectors, and what are we seeing in terms of a recovery, in terms of the entire unlocked trade. Century Ply is one such company. We have with us Mr. Keshav Bhajanka, the Executive Director with Century Ply. Thank you so much for joining us, Mr. Bhajanka. To start with, how has demand been in April and May? I'm sure May has, of course, been a tough month for you, like many others. If you could sort of talk to us about the kind of maybe sales loss that you saw, and also now, now that cases are waning and largely the peak of the second wave is behind us, to what extent have you as well kick-started operations? How are your different plants operating right now?
You see, in the month of April, we had only the last couple of weeks where there was a disturbance. Prior to that, the first 2 weeks were looking quite good. Overall, we ended the month at, say, 25% down compared to our normal average. Having said that, April normally has a downward trend because March is a big month for most companies. May definitely has had a big impact. May was affected because of the COVID second wave. And we saw our sales reduced to a fraction of what they used to be. Going forward, June looks like we are going to get back on track. Already the economy is opening up. A lot of markets have gotten back into action. A lot of markets have restarted. And I think June will see a substantial recovery. And from July, we should be back to normal operations. During this time period, we have taken this as an opportunity to build up our inventory. So most of our production units are active. And last year, we had depleted a lot of inventory because the recovery was far faster than anticipated. So this time, we're trying to gear up a little better.
Okay, so essentially gear up for the next wave of demand that will come by once all of this passes. How have I wanted to understand the mix between rural and metro, because this second wave seems to have hit the smaller towns in a more larger manner than what we saw during the first wave. So firstly, to what extent does Century Ply cater to those markets? What's your distribution network like? And is this something that you are witnessing, that, maybe demand in the smaller towns and the non-metros has been hit to a larger extent than cities because of the way the wave has panned out this time?
I think we are at an advantage because we are perhaps one of the most, the best distributed products in our category. So Century Ply has a pan-India presence, and we're present in most rural and urban markets. Last year, when we had this notion that the rural markets were performing very well, urban markets were also doing okay. This year, yes, even we have from our sales team, from our channel partners, the messaging that we have got is that rural sector, the rural economy is far, far worse hit than it was during the last wave. But having said that, it is too early to comment on which way the recovery will take place. Last year, the recovery took us by surprise. And this year also, even though the rural sector is quite badly hit, I think the recovery is likely to be stronger than what most of us are expecting.
Keshav, hi there. Good afternoon. Given that, a lot of the key inputs have risen sharply, led by the rise in crude prices, what is the outlook that you foresee on your overall margin picture?
I think we have taken price increases across the majority of our products. And as such, I don't see margins being hit due to raw material cost increase. Definitely margins will be hit in the short term, particularly this quarter, because of lower operational leverage, because the capacity utilization is going to be far below what it was towards the latter half of last year. But in terms of raw material price increase, we have been able to pass this on successfully to the market. And as such, I don't think it is going to have any meaningful long-term impact on our margins.
Okay, fair enough. So are there any more price hikes on the anvil?
The market situation is still a little bit fluid because a lot of raw material, for instance, if you look at phenol or melamine, there is still a lot of disruption because of a number of factors. So we'll have to play it by the ear. But I believe that going forward, we are not looking at too much of a cost pressure because things, in our opinion, are already close to peak. So hopefully going forward, raw material prices should be going down. But at this point, we're not looking at any further price increases.
Okay, all right. I wanted to understand your market share. You do have the plywood segment does have quite a bit of unorganized players. The market's a bit fragmented over there. Do you think that this last few months, this last 1 year, has sort of given you the opportunity to maybe garner some market share? If you could shed some light on that.
They say once bitten, twice shy. So. Okay, honestly, I do believe that we will benefit substantially going forward because the unorganized sector has been hit very badly. I think this has been far worse than the first wave. And after the first wave, the unorganized sector took a very long time to recover. This time, I think the journey is going to be all that more difficult for unorganized players. In plywood, only 30% of the industry is organized as of now. And I think this percentage will increase steadily over the course of the next year or so. So if that does happen, Century Ply is likely to be the biggest beneficiary.
All right. Where, you mentioned that in July, things will be sort of back to normal. Do you believe that this recovery that we will see, to positive growth will be faster than what we saw in the first wave? This time around, the government as well is, boosting housing for all, the whole infra push as well in a big manner. Governments are pouring money into that. Plus, let's not forget that with realty prices falling so much, the fact that financing a home as well has become cheaper because interest rates have fallen. I guess there will be more action on that front as well. Do you think these will be sustainable growth triggers as well for you?
Long term, definitely, these are going to be very big growth triggers. Having said that, the first wave, we had all heard of COVID. In the second wave, we have all felt COVID. There are a lot more people who have been exposed, there are a lot more people who've lost near and dear ones. So I think the recovery is going to be similar to the first phase. I don't see it being much faster because of the sheer devastation that the second wave has caused. But all the factors that you have pointed out, whether it be low interest rates, whether it be revival in the realty industry, whether it be lower realty prices, I think they are very good long-term triggers, and we should be able to benefit later this year or next year or for the foreseeable future.
All right. Thanks very much for joining in, Keshav, and sharing with us the outlook of how business is shaping up and what your future prospects look like in light of the pandemic.